Welcome to this episode of our podcast, where we discuss the latest news and trends in the world of blockchain and cryptocurrencies. I'm Jane, and joining me today is my co-host, Nike.
Hey, Jane. It's great to be back on the show.
Yes, it is. And we have some interesting news to talk about today. The Arbitrum Foundation has backtracked on a controversial proposal and ratification vote that gave it control of a huge chunk of tokens.
Yes, that's right. For those who don't know, Arbitrum is an Ethereum Layer 2 solutions provider that offers faster and cheaper transactions than the Ethereum network.
And according to the news, the foundation has backtracked on its governance voting system following community backlash from token holders. The move will break up the debatable governance package into smaller segments.
The foundation admitted that its first governance proposal, AIP-1, was too large and covered too many topics. They will follow the DAO's advice and split the AIP into parts, which will allow the community to discuss and vote on the different subsections.
This is a great example of how the blockchain community holds companies accountable. The community backlash caused the foundation to rethink their governance model, and the fact that they listened to the feedback and acted on it is commendable.
Yes, it is. The foundation stated that the 750 million tokens received would be voted on in its own AIP. They are also working on options to add more accountability, like a vesting period of 4 years. Furthermore, tokens held by the foundation cannot be used to vote.
That's a good step towards decentralization, but critics like decentralized finance and decentralization advocate Chris Bleck still argue that the proposal was decentralization theater.
It's true. Some people believe that the foundation is trying to create the appearance of decentralization while still retaining control. This is a controversial topic in the blockchain space, and it's important that companies take steps towards true decentralization to gain the trust of the community.
The foundation has also proposed a budgeting proposal, which will include transparency reports to make the community aware of how the funds are spent over time. This is another positive step towards transparency and accountability.
Absolutely. And the special grants program is vague and lacks DAO involvement. The foundation has announced that it will be renamed Ecosystem Development Fund, and they will provide context on how the funds will be used to benefit the Arbitrum ecosystem.
This is a positive development, and it shows that the foundation is listening to the community's concerns. It will be interesting to see how these changes affect the value of ARB token.
Yes, ARB token prices took a massive hit over the weekend, slumping 18% from an April 1st high of $1.40 to a low of $1.15 in the April 3rd morning Asian trading session, according to CoinGecko. It has seen an 86% price decline since its airdrop on March 23rd.
Our next news is about Bitcoin Ordinals reaching a new all-time high. According to Dune Analytics data, Ordinals reached 58,179 inscriptions on April 2nd, breaking the previous all-time high of 31,692 on March 9th by 83.5%.
That's quite a surge, and it's believed to be driven by the recent creation of Bitcoin Request for Comment or BRC-20 tokens on the Ordinals protocol by a pseudonymous on-chain analyst named Domo in early March.
That's right. While Ordinals are non-fungible token or NFT-like digital artifacts that carry data in various forms like text, images, PDFs, video, and audio formats on the Bitcoin network, BRC-20 token standard utilizes ordinal inscriptions to deploy token contracts, mint tokens, and transfer tokens, similar to Ethereum's ERC-20 token standard.
And it seems the spike in ordinal inscriptions came after new tools were launched to interact with BRC-20 tokens in the last few days.
Absolutely. Among these new tools include ORD.io, Unisat Wallet, and BRC-20.io. According to BRC-20.io, over 1,600 tokens have been created since the BRC-20 standard was created.
And some of the most popular BRC-20 tokens include Pepe, Ordi, and Punk, with market caps of $2.5 million, $2.1 million, and $900,000, respectively.
It's interesting to note that over 42,700 BRC20 tokens have been minted in the last 24 hours, mostly coming from tokens like Domo, BYC, and Meme.
That's a lot of new tokens being created, and it's worth mentioning that the market cap of BRC20 tokens currently sits at less than $10 million.
Yes, but some digital asset investment firms like Galaxy Digital believe that the Bitcoin NFT market may reach $4.5 billion by 2025.
It's still a point of contention among the Bitcoin community, though. Some believe that Ordinals offer more financial use cases on Bitcoin, while others say it's straying away from Satoshi Nakamoto's vision of Bitcoin as a peer-to-peer cash system.
Well, it remains to be seen what direction Bitcoin will take with Ordinals, but it's fascinating to see how the ecosystem continues to evolve and adapt to new technologies and innovations.
Today, we have another interesting topic to discuss: the latest Bitcoin price analysis. So, let's dive into the analysis. The latest report says that Bitcoin will trigger massive liquidations if it rises to take out ask liquidity around $30,000. What do you think about that?
Well, this is something that has been anticipated for a while now. Bitcoin has been consolidating below the biggest resistance/support of the last 2+ years, and that's a major hurdle for bulls to overcome. If the bulls manage to break through this resistance level, then price targets could extend beyond the $30,000 mark.
That's interesting. But what about the bearish side of things? Do you think there's a possibility of a correction?
Yes, there is a possibility of a correction. Some traders are more pessimistic and believe that a correction is very likely before BTC/USD hits $30,000. But on shorter timeframes, traders seem to be content to wait for the weekly close to cement prior gains. Ranging this weekend it seems on the corn, and for continuation the bulls want to reclaim the range high at $28,750. Until then, we chill.
It's interesting to see how Bitcoin has performed over the last month. Managed to crown itself one of Bitcoin's best March months. According to data from CoinGlass, 23% gains for BTC/USD almost match its 2021 performance, with 2013 remaining its most volatile. Bitcoin's trajectory mimics both years, seeing at least 3 months in the green before significant consolidation began.
It's also worth noting that members of the Bitcoin community are still split on whether Ordinals is a good fit for the Bitcoin ecosystem. Proponents suggest it offers more financial use cases on Bitcoin, while others say it's straying away from Satoshi Nakamoto's vision of Bitcoin as a peer-to-peer cash system.
That's true. It will be interesting to see how the market develops and what impact these changes will have on the cryptocurrency space in the coming months. Today, we're going to focus on Curve Finance, a decentralized exchange, DEX, that has been making waves in the DeFi space. So, what do you think of Curve Finance?
Curve Finance is definitely one of the most interesting projects in the DeFi space right now. The platform was launched in 2020 and has since expanded to feature support for not just Ethereum, but for multiple sidechains as well. This gives users more flexibility in terms of which blockchain they want to use to interact with the platform.
That's great to hear. Could you tell us more about the pros and cons of using Curve?
Sure. One of the biggest pros of using Curve is that it's a non-custodial platform. This means that the platform never takes custody of your tokens, and your coins are always in your control. Additionally, Curve offers multiple liquidity pools, which is a big draw for many crypto users who want to hold their tokens over a longer term rather than trading them. Curve Finance is also truly decentralized in terms of governance, which is done via its governance token, CRV. Lastly, the fees and pool parameters for using Curve are lower on average when compared to many of the similar platform options.
Those are great benefits. Are there any downsides to using Curve?
One of the biggest downsides of using Curve is that it's heavily dependent on the Ethereum blockchain, which is known for its high transaction fees. Additionally, the interface is difficult for new users, and it requires a significant amount of working knowledge about crypto in general and the platform itself.
That's a good point. What do you think Curve is best for?
Like many DeFi exchanges, Curve has a limited set of features that make it great for some purposes and very limiting in other ways. One of the challenges of DeFi is to move cryptocurrency from one place to another. This is where Curve shines, but that isn't the only benefit. Curve is great for easy stablecoin swaps and liquidity pool management, with multiple liquidity pools giving users plenty of options. Additionally, if slippage is a concern, Curve is worth checking out, as transactions are done with a focus on reducing slippage.
That's really helpful. Could you tell us more about the key features of Curve?
Sure. Curve Finance is focused on truly giving options in terms of liquidity pools, crypto types, and open statistics. Users can pick the pool that best matches the risks they want to take on and the coins they're most interested in. Additionally, getting connected quickly without fuss or hassle is easy, and multiple wallets are compatible with Curve. Finally, users can see daily stats, coin volumes, and even crosspairs with just a few clicks.
That sounds great. What cryptocurrencies are listed on Curve, and what are the fees for using Curve?
Multiple cryptos are listed on Curve in various pools. Some of them include Liquidity USD, Synthetic USD, and Synthetic ETH. The fees for using Curve depend on how balanced transactions are and are determined based on trading volume.
Absolutely. And one of the best things about Curve is the APY rewards that users can earn. They can earn up to 25% APY by combining all the rewards in a single liquidity pool. And the APY varies depending on the pool, the assets, and market conditions.
That's an impressive return compared to earnings from crypto interest accounts. For example, if you look at the popular crypto interest service HODLNOT, it offers only about 9% APY on low-risk assets, which is considerably lower than the APY Curve Finance offers.
And don't forget that users who provide liquidity to the pools on Curve Finance also receive free CRV tokens, the exchange's native tokens. These tokens can be swapped with any other asset, which you can withdraw into a crypto wallet, or they can be locked on the exchange to earn DECRV, native tokens that allow users to gain voting rights of the platform. With this perk, users not only earn interest from liquidity pools but also benefit from the platform's free tokens.
Another great thing about Curve is that users can create their own customizable liquidity pools in the easiest and most efficient way. Users can decide which tokens will go into the pool, allocate portions, and then earn from the pool as long as it can be sustained by other traders as well. Curve Finance allows everyone to create liquidity pools without any requirements or limitations.
And let's talk about the fees for using Curve. The transaction fee at Curve Finance depends on the network you have chosen and market conditions. It can be as low as a few cents or as high as a couple of $100s for a simple transaction. Make sure to check the fee before approving any transaction. The transaction fee applies to all deposits, swaps, and withdrawals on the exchange.
The liquidity pool fee is decided by Curve DAO members, so it can vary if the members vote to change it. But right now, Curve Finance has a fee of 0.04% on all pools, half of which is given to all the liquidity providers and the other half of which goes to the DAO members.
So, based on our discussion today, what are your thoughts on Curve Finance?
I think Curve is an excellent platform for anyone who's looking to swap between stablecoins easily, manage liquidity pools efficiently, and earn impressive APY rewards. And with the ability to create your own liquidity pool and earn free tokens, Curve is definitely worth checking out.
Thanks. That was really informative. Do you have any final thoughts on Curve?
Yes, I'd like to emphasize that Curve Finance is definitely worth exploring, especially if you're interested in easy stablecoin swaps and liquidity pool management. The platform is constantly evolving, and we're likely to see more exciting developments from it in the future.
And that concludes our discussion on the latest news in the world of blockchain and cryptocurrencies. As always, the world of blockchain and cryptocurrencies remains highly volatile and unpredictable, but one thing is for certain, the potential for innovation and disruption in this space is endless. Thank you for listening to our podcast, and we'll see you again soon with more updates on the latest in blockchain and cryptocurrencies.